Hello traders, Gary Wagner with the Gold Forecast here the first day of October. It is Friday and this is the Daily Report, our weekend review. Gold continues to break out to the upside. Forex gold currently trading at 1318.93, 1320. That's basis the most active December contract here in gold. As you can see right in here, today's activity as well as here. On today's report, I'm going to talk to you about a wave count and some upside projections for this wave. I'm also going to talk to you about my sentiment for gold prices over the next coming month, all here on today's report. With the recent activity that I've been looking at and some close study of the market, I do at this point believe that the retracement that we saw back in the middle of September, this retracement right in here, which was a 23% retracement, was in fact our wave 2. I do believe at this point that we are in wave 3 because of the activity and the action to the upside. That being said, what that allows us to do is to do some upside projections because, of course, wave 1 is that benchmark wave that we're going to be using for our retracements on our corrective waves as well as our adjustments and upside targets and projections for waves 3 and 5. As you can see, what I've done is I have basically looked at the fact that if wave 3 simply equals wave 1, my upside target at this point is 1340. Yes, 1340 is my upside target based upon a move on wave 3 that is equal to wave 1. We'll talk about the fact that if we do see this market take off with a more aggressive stance, which I find very difficult to believe, but seeing is believing, and that's what we're witnessing here, we could look for wave 3 to be as much as 1.61 times that of wave 1. And I'll look at that projection in a little bit. Traders, here's the key, and this is what I'm really looking at. One of the reasons that I want it to be flat today is typically if a market is going to sell, it has sold on a Friday. Being in uncharted territory like this, at some point, there will be a round, and a massive round of profit taking, and I don't want to be caught on the wrong side of the fence. That's the caveat. However, my belief is I want to remain flat over the weekend. I personally think that through next week, prices will continue to climb higher, and I believe that they will start to inch their way up towards this 1240 mark. However, caution must be the number one underlying essence that we look at, because when we're in uncharted territory like this, we want to be as cautious as possible and at the same time be able to extract as much profit as possible from the market. So what I am looking at personally right now is to re-enter the market from the long side next week. If we see continued activity like this, we'll look to enter either Sunday, probably Monday after it has run through Australia, Asia, London, and then into New York, and then we'll look to take a stab at it. But I do believe at this point that this wave will probably take us up to, as I said, around the 1340 mark in gold. Traders, what we're looking at is a weekly chart of gold. And as you know, on the weekly chart, although it's not something that we can trade off of, it is something that we can step back and take a look at the bigger picture. What I am noticing today is an excellent example of a pattern called three white soldiers. These three red candles here, where you get large bodied candles and you get consecutive higher highs, higher lows, higher closes. And as the market moves up, this is, in terms of a candlestick pattern, one of the better illustrations of what we call a continuation pattern. Another thing that I do want to point out on our weekly chart is that at any potential top in the market, such as this top here, that first one at 1265, this top here, this retracement here, and this top here, there was some sort of an indicator or a candlestick signal that signaled an end to that particular rally. No such signal is available, nor present, nor visible at this point in gold. Traders, this is the December contract of COMEX Gold. We're looking at our Elliott wave count, similar wave count to, of course, the Forex daily chart. And as you can see, our projections also take us up to about 1345, right around there, and that's basis December gold. Of course, that will soon, within some period of time this month, we'll start switching over to our next outer contract month. But for right now, it seems as though not only does gold want to trade higher, but is destined to trade higher, I believe, to move into those mid areas of the 1300. As you know, my original projection that I looked at was around 13 and a quarter. I do believe at this point that that in fact will be taken out. And my sentiment, as I said, is that mid-level of the 1300s, 1340, 1345. Traders, this is the COMEX contract, December contract with the MACD, and that, of course, is our moving average convergence divergence. And the one thing that is notable right in here is that when we take a look at this recent activity, you can see that these moving averages are beginning to move further apart, which to me indicates a strengthening or a continuation of that trend. As you can see, as the market rallied up straight, these lines did move apart. Right here where we had this small retracement, this 23% retracement that I'm calling wave 2, that's this one area right in here where they came back together. And as you can see now, we're in a scenario where they are moving apart again. To me, it is further illustration that there is good technical information for this market to trade higher next week. Traders, this has been an incredible week here. Gold is trading at record territory. It has been doing that almost on a daily basis. The last thing that I do want to look at before I bid you adieu for the weekend, of course, is going to be this volume. And as you can see, since September, this volume has had a steady increase to where it is currently at. You can see this decrease in volume that we had back in August. However, we've got solid volume, and it is also back to the areas that we had right in here, and this is back June through July. Traders, let's see what happens next week. As I said, I believe that the potential next week is for a continuation of higher prices. This has been Gary Wagner, wishing you, as always, good trading, and we'll talk to you Sunday for the Daily Review. Have a great weekend. Bye-bye.